Hello, Bitcoin traders. Welcome back for another daily episode of Bitcoin Technical Analysis with me, your pal, Rocky Outcrop. And in today's video, we'll be taking a look at the lower time frames, which is unusual for us to start off with. But there might be a head and shoulders pattern appearing on the charts. And today it is Saturday, the 1st of February 2020. And isn't it a wonderful time to get outside into the weather and clear the cobwebs? No, not really. It's a bit dreek and dreary and chilly here in Scotland, and that's Scots language for you there, dreek. It means dreary, and well, if you don't know what dreary or dreek means, well, it means this basically. It's raining on me right now, but because I'm Scottish, I could stand out in this weather for hours and not even feel a tiny little bit wet. So it's Saturday, and that's brilliant. We get to trade 24 hours a day, 7 days a week if we want to. Unlike my colleagues at the old investment bank there, one of the biggest investment banks in the world, who have to take the weekend off, but we don't. We have the luxury of trading 24 hours a day. And let's just go dive on into the charts, and I'll show you what I was talking about. Hello friends, welcome back, and thank you so much for joining me again, and please do like and subscribe. And if you think that this video and these things which are a little bit different are fun and you enjoy watching them, please share them with any friends that you might have. And we're now best friends, so share it with your other best friend, because a friend of yours is a friend of mine. So here we are, and I'm going to try and keep the video really brief today because I didn't tack a cup of kindness in here with me, and I could really do with a cup of tea. Tack a cup of kindness, eh? And so let's just check out the prices. I've put them up really high above me. The current price is 9,337, and the lows, please be this side, are 9,311, and the highs are 9,464 in today's 24-hour range. And that's quite a small range, really, that we're looking at. And indeed, like I mentioned, there's a potential head and shoulders. I think you might be able to see it just there on the charts. In the smaller time frames. Now, if I show you on the larger time frames, it's basically just a smidge. But we go down to the lower time frames, you get a little bit of a shape here. Now, where would I think that this would play out if it were to play out? Now, I'm not into drawing lines on the chart to do measured moves because I think that's child's play. But you can do it if you like. But you can see here that the top's in around here at 9,500 and something, and the bottom's here at 9,200 and something. So we'll call it $300. And the neckline would be at around 9,200 or so. So we could say that if it went down the full measured move, that would be 8,900 or so, which would be fine, you know, because we wouldn't quite be setting in a lower low on this time frame yet, and we could certainly just continue trading up afterwards. And that would resolve this bearish divergence that we've seen across all three oscillators down below. Currently, we're being supported by the 21 moving average, and we're just underneath the 10 simple on the 21 exponential, sorry, and we're just below the 10 simple currently, which you can't actually see very well because my screen's too dark and it's just wee dotties there, but I can where the mouse is right now is where that dot is, and we're just sandwiched between the two of them, potentially putting in the right hand shoulder of this head and shoulders. Now I'll go to the 1 hour chart so you can see what I was talking about a little bit better. So the lower down on the crazy time frames that you go, the easier it is to see this sort of pattern. And is it a pattern at all? Well, I don't know. Volume wise, it's shaping up like it could be. And what you can see here from Peter Brandt talks about, and I'll go back over the 4 hours so you can see the volume spike single candle here right in the middle, which is better. What Peter Brandt, who's a really experienced trader and has a wealth of wisdom to share with people, if you ever listen to any of his podcasts or anything, I highly recommend him. Then you can see here that there's two types of volume. You've got starting volume and stopping volume, okay? And in the middle of a head and shoulders like this, you normally would see something like that happen, and that would be the stop of that rise, putting in a stopping volume candle there at below a bar or whatever. And down here at where this could potentially go to, if it were to resolve, you probably get in another larger volume candle there, which could be considered a starting volume candle to resume the uptrend, or indeed a stop on that downtrend if there were to be, which wouldn't be a downtrend. It would just be the resolution of a pattern. Now, could that happen? Well, any pattern which is on a chart lower than the daily is crazy town. You know, it is crazy, but it exists, and why not talk about it? And if you look at the 24-hour chart, you can see what a pattern really ought to look like. Okay, so this is what it ought to look like down here. This is an actual head and shoulders. This is an inverse head and shoulders. You've got a shoulder, and the head down here, and the neckline up here, right? And that was able to take a measured move off of that, which was completely filled when we managed to make it up to this point here, or in around there. And that's why we had this rejection. In fact, maybe it was just there when we got rejected. I can't remember now off the top of my head. I think it was actually. And that then we came down, and that I had confluence with the larger macro factors that we were looking at the time. So is this something to be scared about? Well, absolutely not. Look at the head and shoulders I'm pointing out on the daily. It's just a splodge. So, but back down to the lower time frames, and you can see what we're talking about. Now I'm going to just not spend long at all here. I did point out how that would resolve that bearish divergence, and if that's were the case, I'll stay on the 4 hour, not go too crazy. I think that looks quite nice, really, overall. And the area to be concerned about if you were long and you're holding on to a long, of course, would be more or less down where this 55 moving average is here, which would be the resolution of that head and shoulders if it were to come down. And I think as well would probably just then continue on up afterwards. This head and shoulders at the top here would be a reversal pattern, but of course this is such a small time frame that anyhow. So. So, sorry if that's too brief a summary when I go, but I think that's quite succinct. So, there we are. That's what we're looking at, and you can see that's the divergence that I was talking about over here between these points here, and that could play out and finish off over the weekend. And how would that look on the weekly chart if we were to not actually go up? Because this would all be happening over the weekend. Well, on the weekly chart, you can see that the target for us in terms of turning this thing around for trend-wise is up there at the 9,500 level, where we came up and we touched off of and we were rejected. And you'll often hear me say in videos that we were rejected on our first pass. Why do I say that? Because it seems to happen so often, more often than not, in fact, that when you go up to significant areas of support and resistance that you'll be rejected on your first pass. And you'd think that would make things a little bit more simple for us to manage our risk in terms of getting in and out of positions, and it certainly does. So it's a hella good tip to have. Now over here you can see this was previously was support, then resistance, and then we came up and we touched it, and what were we? Rejected on our first pass. Say it with me. There you go. So could we come down here and do something during? Could we end this week in and around this area, or even here with this line of is, and then go on up afterwards and sort of try to break this, try to really set this trend in on the weekly chart during the month of February? Sure, we sure could. And February is one of those beautiful months where it's basically 4 weeks all in. So at the end of the month, pardon me, we'll also be coming up to the start of a new week, and everything will be lovely. So we'll see how all that pans out over the course of this month. And on the monthly chart, let's just celebrate the fact that we have, in fact, managed to create that high that we were talking about, which is great, because on the monthly chart, it's been an awfully long time since we've had a bullish engulfing candle like this. Now look at that. That surely engulfs the hell out of that candle right there. And let's just look and see, indeed, the last bullish engulfing candle is, because it certainly wasn't this one, was all the way back here in February 2019. So a year ago now. Isn't it amazing how time flies? Well, it flies for us because we're Bitcoin traders and we operate in 24/7 markets, unlike, as I said, my old colleagues at the investment bank who called themselves global advisors, where indeed have their weekends and the weekdays to think about, and time doesn't fly quite so much for them stuck in the office. So this is wonderful for us that we get to see this potential here of a macro turning around trend where we could have a degree of bullishness for a longer period of time, and that's great. It's easier to trade in a bull market than it is in a bear market when your base currency is Bitcoin anyhow, and for us that's generally speaking the way that it works. So when things are going up, then we don't even have to do anything. We're always ever so slightly long on the market. Whereas if you're trading in Bitcoin and your base currency is Bitcoin, of course, you really need to be working those shorts hard to not have your portfolio just simply devalue as you stand still and the rest of the world moves downwards. So I think that really more or less wraps up what we've been looking at in the video today. And I've kept it quite brief, which was the goal. So just to summarise, if that head and shoulders is real, what we'd be looking at would be coming down and potentially setting a higher low in and around that area, because I believe that you could probably wick the bottom out if it were to look like it could potentially be setting in a lower low on the 4-hour trend, which would not be good, but we'll have to keep an eye out for that. It could just result in a wick, and I would throw out a word of caution to everybody. It's always good to know in advance what the FOMO analysts out there will be saying as these things come. So of course this pattern could completely not even be a pattern at all. I say pattern because I'm Scottish, and I apologise for not saying T's properly. But this pattern, that of course could not be a pattern at all in the end, and it could just be sideways action, and that's totally fine too. But if it were, then of course the FOMO analysts will probably start to get a little bit shaky and start saying bearishy things right in and around those crucial moments when it's better to have thought this out in advance when you're sober like we are now. And how would that affect things? Well, of course, we would have these gaps here filled on the CME chart, this particular gap here in and around that 9,000 level, and potentially even this other tiny gap, which believe me is in there, at around the 8,500 level. Now, I say 8,500 on CMEs, and of course we know CMEs have got a premium over spot prices, so that would be fairly scary on the price if that were to happen. But just to point out again, as I pointed out in yesterday's video, go to the daily to do this a little bit quicker, that you can see on November the 4th or so, round about here. Is that right? No, that's May, that's the wrong one, but still same point actually, as it happens. But this one here, this wick here, this heinous wick, came all the way down to the 200 exponential moving average on the CMEs, and you can see what an atrocious wick that was, all to fill up this gap. And how did that translate onto the spot prices? Well, we just have to take a look at November the 4th. Which, if you bear with me, we will see soon. And over here, well, no, there's no monstrous wicks action happening in that area going down to that 200 exponential moving average on this chart. So they don't always translate. So could that all resolve itself and over the next wee while without necessarily affecting the spot price? It could. So there's another thing to be wary of, to know and have in your knowledge bank in advance of any sort of FOMO analyst coming in and saying something like like that we're all doomed. Okay, so thank you so much for joining me. Yous are all my new best friends. A friend of yours is a friend of mine. Let's share this and find if we can get any more people interested in the Rocky Outcrop community. Thank you so much for joining me for this one. Any likes and subscribes, I appreciate it so much. So much. And as always, I do these videos every day, so I'll be back with another update tomorrow, Sunday the 2nd of February, and we'll see how things have shaped up and if we're going to be going into Monday with any sort of bullish mentality or negative bearish mentality. We'll have everything covered. I'll keep you in the loop as always. Catch you next time.